If you've been watching the real estate market in Toronto recently, you might have noticed something interesting. Condos, which are one of the hottest segments of the market, are suddenly seeing more inventory, softer prices, and a lot more negotiating power for the buyers. But to really understand why that's been happening today, we really actually have to go back more than 20 years. Because what we're seeing right now is a result of three major condo cycles that transformed Toronto from a low rise city to one of the most vertical cities in North America. And the third phase of this condo boom is something buyers completely missed. And this is the reason the market looks the way it does today. And once you understand these cycles, you'll start to understand why 2026 might actually present opportunities for buyers. So let me break it down. Today, when you look at Toronto's skyline, it's packed with high-rise condo towers. But if you go back early 2000s, Toronto looked very different. Most housing consisted of detached homes, low-rise apartments, and older condo buildings. Developers were only beginning to experiment with large-scale condo communities. Projects like City Place and the revitalization of Toronto's waterfront were some of the early signals that the city was starting to embrace vertical living. At that time, condos were seen primarily as affordable starter homes, and downtown units were often selling somewhere between $200,000 and $350,000. And many buyers were simply young professionals who wanted to live close to work. Now, investors existed, but they weren't dominating the market yet. This period marked the beginning of the first major condo cycle in the GTA. The first real condo expansion happened between 2000 and 2008, where Toronto was going through a major shift towards urban living. Several things were driving this demand. Young professionals were moving downtown, there was an expansion of the financial district, there was a waterfront revitalization, and policies that made condo development a lot easier. Developers started to quickly realize something important. People were willing to live in smaller spaces in exchange for convenience and transit access and being close to work. So the number of condo developments started to begin growing rapidly. But this cycle came to a sudden pause during 2008 global financial crisis. Sales slowed significantly and many developers delayed launching new projects. However, what happened next would completely change the condo market forever. Here we enter cycle 2. After the financial crisis, interest rates start to drop drastically to stimulate the economy. Borrowing money suddenly became a lot cheaper, and at the same time, Toronto's population began to grow rapidly through immigration and job creation. The rental demand started to rise quickly. But the biggest shift in this period was that investors started discovering pre-construction condos. Developers often required a 20% down payment spread over several years. That meant that investors could control a $600,000 property with roughly $120,000 over time. And as prices continued to rise, many investors saw strong appreciation even before the building was completed. So by around 2015 and 2016, investors had become a major force in the condo market. And some estimates suggest that more than half of new condo purchases were actually made by investors. Condos were no longer just starter homes. They had become investable assets. So we enter now cycle 3, where the most aggressive phase of the condo boom happened between 2017 and 2022. And during this period, Toronto had more construction cranes than almost any other city in North America. And several forces came together. There was very low interest rates, strong immigration growth, rapid population expansion, and a pandemic era borrowing costs near historic lows. And at the same time, pre-construction condos began attracting speculative investors, where some buyers were purchasing units with the intention of assigning the contract before completion. And prices climbed quickly, where new launches in some parts of Toronto were reaching $1,200 to $1,500 per square foot or more. And the investor participation surged even further. Some estimates suggest 60 to 70% of new condo purchases during this period were investor driven. But this created an important situation that is affecting the market today. Here we enter the pre-construction timeline. One thing many buyers don't realize is that condo development works on a very long timeline. From the moment a project launches to the moment owners receive their keys, it could take often 4 to 7 years. And that means many of the condos completing today were actually sold years ago during a completely different market environment. Many of those units were purchased between 2019 and 2021 when interest rates were extremely low and investor demand was very strong. Today, those same buyers are closing on their units in a much higher interest rate environment. So mortgage payments are now higher and carrying costs are also higher. And in some cases, rental income doesn't fully cover ownership costs, which is one of the reasons we're now seeing more condo listings entering the market. Interestingly, the dynamic affects condos much more than freehold properties like detached and townhomes don't have the same type of development pipeline. You can't suddenly build thousands of new detached homes in a downtown core the way developers can build condo towers. The land availability is limited, zoning restrictions are tighter, and most neighborhoods are already built out. And because of that, condo markets tend to be more cyclical, while freehold housing supply remains more constrained much across the GTA. So who does buying a condo make sense for today? Well, in many cases, condos still make sense for first-time buyers who are wanting to enter the housing market but aren't ready for freehold prices. Young professionals who value location, transit, and lifestyle amenities. And long-term investors. So those who are focused on holding property over many years rather than a short-term speculation. And what's important today is making sure the numbers work based on today's interest rates and not the ultra low rates that we saw during the pandemic. And for buyers who plan to hold property long term, today's market may offer more negotiating power and more options than we've seen in several years. So in summary, Toronto's condo boom didn't happen overnight. It was built through three major cycles: the urban growth in the early 2000s, the investor expansion during the 2010s, and heavy speculation during the pandemic years. Many of the condos completing today were purchased during that last cycle. And that's one of the reasons why the condo market is experiencing more supply right now. But real estate market moves in cycles. Sometimes the periods that feel uncertain are also the ones that create the most opportunities for buyers who are prepared. So if you think about buying a condo in the GTA this year and you want to understand what opportunities might exist in today's market, feel free to reach out. And if you found this breakdown helpful, make sure to subscribe for more insights in the Toronto real estate market. Till then, talk to you soon.